Welcome back, everybody. It's your host, Max Pitts from Trades and Gains. Stocks are up, chaos is up, tariffs are up. Yep, everything rallied today. Trump's back on his tariff trade, steel stocks popped, autos tanked, and the Fed's messaging is a complete mess. But guess what? The market doesn't care yet. Welcome to your daily market recap, Trades and Gains style, baby. Like, subscribe, and let's go ahead and dive into this madness. Now, to kick things off here, we're going to talk about our big boys, the indexes. It's a weird green day on Wall Street, to say the least. We saw the S&P 500 up 0.41%. We saw the NASDAQ up 0.67%. And we saw the Dow up 0.08%. Gold was up with a flight to safety bid, and the dollar is down weak on trade war risk. Big tech led the charge again, but here's the twist. This rally came on the back of rising tariffs and economic data that looks recession-y. Let's go ahead and unpack it, why don't we? Now, Trump raised steel and aluminum tariffs to 50%, and China is mad. The EU is mad. Geneva Truce is completely out of the window at this point, but the markets went ahead and shrugged this off like traders have seen this episode before, which is weird. But why did they do this? It's pretty simple. Wall Street's gotten numb. Until this turns real, it's just noise. But be careful, these flashpoints can ignite very fast. Our take here is volatility is coiled, so don't sleep on it quite yet. Now let's talk about the Fed fumble as well. Fed Governor Waller says tariffs inflation is transitionary and shouldn't stop cuts. But others in the Fed are not so sure. The bottom line is Friday's jobs report is now everything. Strong labor plus hot wages equals no rate cut. Keep that in mind, folks. Weak jobs equals Powell might flinch, maybe might flinch, and wear that purple tie that we all love so much. Now watch the wage number. Plus 0.3% month over month is accepted and expected. Do we beat that? That's a game changer for the market and something we need to pay attention to. Now, let's talk about some charts of NVDA, Meta, Apple, and our MAGS ETF. The Magnificent Seven are driving this entire rally. Just in May, they made up 62% of the S&P gain. NVIDIA is up 20%. Meta is absolutely ripping. Apple's finally coming out of its coma and deciding to wake up. And Tesla sold off in Europe, except in Norway. Shout out to F. Jords. No. For Jords. No. I think that's Norwegian for something. But our take on this is stay long, the leaders, but know that they're absolutely stretched right now. Now, we also had a little bit of an economic mess meltdown, as you could call it, dance mom style. Monday's ISM manufacturing came in at 48.5. That is contraction territory. Imports hit the lowest level since 2009. That's not exactly soft landing vibes. Meanwhile, the S&P global PMI looks better on the surface, but under the hood, it's inventory hoarding and price pressure. Trade tensions equals a messier supply chain for us. The translation here, we're skating on macro thin ice. Thin macro ice. Ice thin macro. However you want to put it, the ice is thin and we're looking to bust through it. Now let's go ahead and switch. All right, let's go ahead and shift gears here, folks, and look at some macro data. Options flow from Investor Central Club. By the way, if you're interested in seeing this data live for yourself during market hours, we're running a code 130, and you can get your first month for only $30. Now let's go ahead and talk about some of our big money buys from today. So first things first, we saw PLTR, Palantir, with some heavy action. We saw $5 million in June calls. CRWD, we saw $3.7 million sweep on long-dated $500 calls. Tesla, we saw 1.46 million on Lotto for 2027 robo-taxis. Meta, we saw 1.2 million bet on this week's momentum. Our big bear bets for the week were XLI with $5.5 million in July puts. We saw APP with $1.1 million in long-dated put thesis, and SPY and IWM, that heavy put flow equals macro hedge mode. Now, the dark pool heat got really hot. TLT, we saw 169 million. SPY, we saw 147 million. And Microsoft and IWM, big institutional moves ahead of macro data. Now, let's go ahead and talk about the tapes telling us the funds are hedging hard, but they're still buying that AI stock. Now, let's go ahead and kick things back over and talk about our movers and shakers from our sectors. We saw CLF with a big 26% jump. Steel tariffs equals MAGA metals. We saw Ford and GM both drop 5%. Autos hate tariff input inflation. We saw BPMC up 26% with a Sanofi buyout. And we saw BNTX up 12% with biotech cancer deal coming through for that day. Now, steel's ripping, autos are slipping, and biotech's back in play. Classic rotation under the hood here. Now, here's how we're looking to trade this. We're looking at 59.75 as our resistance on SPX. Our support is at 58.70, and our breakdown risk is below 5,800. Our game plan here is to stay long quality tech, scale into steel momentum if tariffs escalate, avoid auto and industrial names for now, watch Friday's job print. Reaction is more important than result. I'll also give out some scenarios and maybe do another scenario video or write-up like I did for ISM and PMI data as well. Watch Friday's job print. I will give you those scenarios. But finally, we want to tighten those stops. Rotation equals a choppier tape. So look for, if you notice today, SPY was very choppy in the middle of our session. Very, very choppy. But that's your market cheat code for this day. Markets are moving for the wrong reason. When that happens, smart traders get paid. Comment below. Do you think the jobs report will break this rally, or do we see more green in our future? Vote in our poll. Will the Fed cut or freeze? Hit the like button, subscribe, and share this with a trader who still thinks tariffs are just noise. And remember, don't chase green candles, chase context. I'll see you next time, gang. Love y'all.